BYOB. Yeah, it's the movement. Hey, you can be your own bank and take your time while you're learning it. Where you about to be is not where you reside currently. We gon' teach you how to compound it while you're earning it. It's that new type of money. That's a different type of currency. Hey, you can be your own bank and take your time while you're learning it. Where you about to be is not where you reside currently. We gon' teach you how to compound it while you're earning it. It's that new type of money. It's that new kingdom currency. Hey, first of all, let me tell you about the business. Mr. Jerry D. Rogers, he the one that had the vision. Educate and impact at least 2 million. Now it's 4 years later and we still on a mission. Yeah, we talking 2 million families, shifting their perspectives mentally and financially. How many of y'all like being broke? Never mind, don't answer me. But if money is your problem, then actually we got the answer key. Enroll, learn, and profit. It's simple, don't make it challenging. Shout out Miss Tasha Dyer for coming up with the strategy. Now I ain't saying it's easy, cause focus is something you have to be. It ain't no better feeling.
Good morning, good morning, good morning. This is your BYOB certified educator, the Kurt Graham. Come on this morning, just drop it in the chat. Where are you coming from? What city you're coming from? What represent your country? And we will soon drop it in the chat.
We gon' teach you how to compound it while you're earning it. It's that new type of money. It's that new. Hopefully by now you understand, but if you don't, we got you. You gotta make up in your mind, you ain't gon' let nothing stop you. We gon' break that thing down till you simple and proper, and let you know you were created to dominate and prosper. And we just tryna help somebody, we ain't tryna convince you. But it kinda hard to believe if you still ain't interested. You can put your money in the bank, but it won't collect no interest. We can show you how to make your funds have a higher percentage. Who wanna take action? We ain't capping it for real, y'all. Come learn another way that you can pay your bills off. Pull out your phone or your computer after you hear this song. Tap in to be your own bank, movement.com. Hey, you can be your own bank and take your time while you're learning it. Where you about to be is not where you reside currently. We gon' teach you how to compound it while you're earning it. It's that new type of money. That's a different type of currency. Hey, you can be your own bank and take your time while you're learning it. Where you about to be is not where you reside currently. We gon' teach you how to compound it while you're earning it. It's that new type of money. It's that new kingdom currency. Hey, you can be your own bank and take your time while you're learning it. Where you about to be is not where you reside currently. We gon' teach you how to compound it while you're earning it. It's that new type of money. It's that new kingdom currency.
Good morning again. Good morning, everyone. Good morning, everyone. Welcome to this call, Thursday morning call, your intermediate call. This is my first day on this platform. My name is Kirk Graham. I'm a medical doctor. And you look at the picture on my screen, you will see a lady, and that is my wife. None other than your queen of the charts, Miss Alvin Graham. And you see that, and they say as you get older together, you grow to look like one another. So I'm probably looking like her going forward. But as we go forward, I will change the picture. You'll see a picture of both of us together going forward. So good morning again. Good morning, everyone. Wherever you're calling from, good morning, good morning, good morning. I think Miss Dyer wants to say a few words before we go forward.
Good morning, good morning, good morning, everyone. I am excited. And ladies and gentlemen, he pretty much just basically stated what I wanted to highlight, but I am excited, and I'm excited because I've heard this gentleman teach. I've heard his passion behind the charts. I've been able to witness this myself. And so for you all to be able to join us and have the experience, and as he mentioned, Ms. Graham as well, think about the magnitude and the impact that it has on a household when when the entire family understands this skill set. But this morning, you have the opportunity to learn from, to sit at the feet of, to really be present with Dr. Kirk Graham. And yes, he is going to take you, he's understanding how to master these charts, understanding how to analyze. But I want to officially welcome Dr. Kirk Graham to the platform as your educator this morning. Dr. Graham, the call is yours.
Thank you, Ms. Tasha M. Dyer. Thank you very much. It's a pleasure to be here today. Now, as we start today, I'll share my screen. BYOB movement worldwide. 2 million families financially educated and impacted. This is our website here, as you can see on the screen presently. It's the largest economic empowerment movement in the history of mankind. And if you don't know where to find it, you go to BYOBmovementworldwide.com. So here we are. 2 million families financially educated and impacted. And if you come down to the website, you scroll down, you see you can become an affiliate today. You can become an affiliate today. So you have nothing at this time. You should just get up and get on and become an affiliate today. Even if you don't trade, become an affiliate. Become an affiliate. Join the movement. Join the movement. And not only that, every Sunday, every Tuesday, we have a webinar session. We have a webinar every Sunday and every Tuesday. And the next webinar, as you see here coming up, will be this Sunday at 2:30 p.m. Eastern Standard Time. 2:30 p.m. Eastern Standard Time. If you can't make it, still make it. 2:30 p.m. Eastern Standard Time. Get your friends, get your families, get your enemies, get them all on. Because this is something that you want to share with everyone. Your upcoming webinar this Sunday at 2:30 p.m. Eastern Standard Time. And for some unknown reason, you're not able to make this Sunday at 2:30 p.m. Eastern Standard Time, well, we also have one on Tuesday, 7:30 p.m. Eastern Standard Time. What you have to do is to be there. And if you're going to be there, have your friends be there, have your family there, and also have your enemies there. Get everyone there. The BYOB webinars. Also, as we go down a little further, we can see that we are also having a BYOB summit. The BYOB summit. The summits have begun again. Last week was the first. We have another one this week. It says here on the website to reserve your spot. Reserve your spot. And when you click on the reserve spot, this is what comes up on your screen. Reserve your spot. BYOB movement. Consulting LLC. At the bottom, you see here, events. The BYOB Movement Wealth Summit in Cleveland. I've never been to Cleveland, but I would love to go to Cleveland. And for you guys who have the opportunity to go to Cleveland, be there. Support the summit. Be there. Be one of those there to encourage and to help others become part of this movement. A wealth summit. A wealth summit. Saturday, March 25th at 10 a.m. Saturday, March the 25th at 10 a.m. in Cleveland. And here you go. This is how you buy your ticket. It's all there for you. The website gives you everything. This flows right through so nicely. Here you go. You come to this website here now. It says, get a ticket from 0 to 20. Guys, get on there. It's at the Courtyard by the Marriott's Cleveland, Independence 5051, West Creek Road. Get there, guys. Get there. Get your friends there. Get your family there. Just get there. Just get there and support this BYOB Movement Wealth Summit in Cleveland. Make sure you're there. Make sure you are there. All right. Now we go over now to our BYOB TradingAcademy.com or BYOB TradingAcademy.com. And we're looking at the new daily news. And here we go. You know, this website has really been something that I find really, really interesting. Really, really interesting. And I think you do too. All right. The BYOB Movement Worldwide. This is a great platform. It's a great platform. But what it does for me is that every morning I get up, I have a look at the daily news. The daily news. Guys, don't think I forgot to welcome you all because you're calling in from the USA, you're calling in from Toronto, you're calling in from the UK, you're calling in from all around the world. Welcome, welcome, welcome. Welcome to this call today. But let's look at the daily news today. Let's look at the daily news today. You know what's ironic is that the news You don't have to go looking, digging. It's all there for you. It's all there for you. And this one is about 2-3 minutes long. Let's listen to the daily news today.
Live from the world's capital markets, here are the latest financial headlines brought to you by BYOB Trading Academy.
Hello and welcome to Thursday's Daily Financial Digest. Here's what's making headlines in the markets today.
Gold prices climbed after the US Federal Reserve toned down its aggressive approach to reining in inflation in a widely anticipated policy statement and indicated that an end to interest rate hikes was on the horizon. Investors crept cautiously into bank stocks, with share prices, including First Republic banks, moving higher as immediate concerns about smaller US lenders and further market ructions eased in the wake of the rescue of Credit Suisse. Bitcoin sank below $27,000 as the US Federal Open Market Committee did as was widely expected, raising interest rates again, this time by a quarter point. The decision reinforces the Federal Reserve's concerns that inflation remains problematic. The euro gained 0.7% against the dollar in the last session. According to the Williams indicator, we are in an overbought market. The Bitcoin dollar pair fell 3.3% in the last session, after gaining as much as 2.4% during the session. According to the stochastic indicator, we are in an overbought market. The pound-dollar pair gained 0.3% in the last session. The ROC's positive signal is in line with the overall technical analysis. The Aussie got a slight bump of 0.1% against the dollar in the last session. According to the stochastic RSI, we are in an overbought market. The US Chicago Fed National Activity Index will be released at 12:30 GMT. The US initial jobless claims at 12:30 GMT. The Eurozone's consumer confidence at 1500 hours GMT. Japan's National Consumer Price Index will be released at 23:30 GMT. Japan's foreign bond investment at 23:50 GMT. The UK's monetary policy summary at 1200 hours GMT.
We hope that you've enjoyed Thursday's Market Outlook. On behalf of all of us here, we wish you a productive trading day. Be sure to join us tomorrow morning for the latest news and events from the financial markets.
Live from the world's capital markets.
There you go. The morning news breakdown for everyone here. And you can find that at byobtradingacademy.com. And that only gives you the morning breakdown, it also gives you some technical analysis on different pairs that seem to be moving for the morning. And we can look, as we go down here, we see Euro USD. Euro USD, it says gain 0.7% in the last session. All right. And we also have GBP USD, which also gained 0.3% in the last session. The AUD USD, and it says the Aussie got a slight bump of 0.1% against the dollar. So it gives you ideas. It tells you exactly what to look out for on this particular day, how the market is moving, how the market is setting up, what the technical analysis looks like in the market. And it helps you to get your mindset for the day going forward. All right, to get your mindset for the day going forward. But I know there are some of us who love to go back to the basics, and they love to come back to the My FX book, my FOREX factory, and my FX street. So you come back here now today. Today is Thursday, March 23rd, 2023. And you can look here and see what is going on at the present moment. Let's update this a minute. And let's see what's happening here. Now, so you got your Thursday today, 23rd of March, 2023. And you can see that looking for what comes out in a little while, we have, as you heard before, there's the Bank of England interest rate decision again today for the UK. That will have an impact on the market. You have, and you come down a little bit further, the red folders, you have lots and lots and lots of US news today. All right, lots of US news today. So if you're trading those US pairs, be careful. Keep in mind a keen eye out the fact that there's lots of US news today. All right, keep a keen eye on that. Lots and lots of US news today. All right. You can also have a peep over at the FX Street for Thursday. Similar stuff. Lots of Great Britain news and US news again today. But you see that the difference between the two is that my FX book stresses on the US news, while this one, which is FOREX or FX Street, places greater emphasis on the Great Britain peers. All right. So you compare the two. That's why you don't just look at one. You look at more than one. All right. It helps you look at more than one going forward. And then we have FOREX Factory again for Thursday. It talks about the British here. It highlights the Great Britain, and down here it does. And in this one, it doesn't really highlight the US news. So the red folders, guys, keep an eye on those red folders. We look at all three, we compare the three, we see which ones. And if you can see a red folder on one and you don't see it on the other one, make sure you put that into the back of your head that there's a possible red folder in that pair for today. All right. And for those who are probably new to this call altogether, remember, the red folders are the ones that tend to move the market. The red folders are the ones that tend to move the market. So before we go over to our charts today, we want to just say to tag our mastermind team. Now, Mrs. Tasha M. Dyer and Mr. Gerald D. Rogers, those are the ones who conceptualized this idea, and they've passed it on to us. And we are here today because of the fact that they have thought it great in their head to share with us so we can share with others. So guys, tag the team today. Tag them, put the fire emojis, tag them. Let them know that we appreciate what they have done for us and what they are still doing for us. So I expect to see some tags, some fire emojis, so that Mr. Rogers and Ms. Tasha M. Dyer, you can see that we appreciate what you have done for us in the past and you're still doing for us today. Guys, remember, next week, Monday, after my call today, that's going to be it for the week. But remember, next Monday, again, we start all over again. Ms. Graham at 5:30 a.m. Eastern Standard Time. Ms. Tasha M. Dyer at 9:30 a.m. Eastern Standard Time. And we go again from next week, Monday. We want to see you on all of these calls. Bring your friends. And we also remember, we will soon be leaving Zoom platform to go into our own platform. So it's imperative of you and those who are on here that if you're enjoying these calls and you want to continue in these calls, you have to join our movement. You're going to have to join our movement. So you go back and enroll. And you go back to the website. It tells you exactly how to enroll. You're going to have to join our movement. Because going forward, we are not going to be on Zoom much longer. All right? We're not going to be on Zoom much. So make it a habit. Make it a plan of yours to become a member of this BYOB movement. Let's move over to our charts. Let's get over to our charts. Let's get over to our charts. Let's get over to our charts. Now, I'm sure most of you would have joined the basic class with Mrs. Graham and the trade setups with Ms. Tasha M. Dyer. So what I'm going to do today is just build on that, what you've done before, and just move on and go forward with that. All right. Now, I'm assuming that everyone here will be at a certain level in your trading, but I'm going to recap something a little bit quick so that you can catch up and then make sure that everyone's on the same wavelength. Now, we can look at some trades today, possible setups going forward, and some possibilities of what can happen in going forward in the future. All right. Now, I'm going to do something a little bit different. The first thing I'm going to look at today, remember yesterday, there was lots of US news yesterday. And what happened yesterday? I like to ask a lot of questions. I like to get some feedback. What was the US news yesterday and what happened? You can put it in the chat. Let me see what you are actually following your fundamental analysis. What happened yesterday? How did the US news, or what happened yesterday that was so significant in the US? Anyone, just drop it in the chat so we can see. What happened yesterday? Interest rate. Good. What happened to the interest rate yesterday? What, did it go up? Did it go down? What did it do to the market yesterday? It went up. Someone said it went up. It went up. So not a 0. Was it a 0.25% going up? Yes. So what did the market? How did the market react? How do you see the market reacting yesterday? What did the market do? Somebody said it went up. All right, it went up. It went. Interest rate went up. It bought, and then it sold. All right, good. So, guys, the first thing I want to look at today, you will find that I try to incorporate everyone in my teaching. I want to just recap a few things here. Just a few simple basic building blocks. Okay, a few simple basic building blocks. All right. Now, here we go. A few basic building blocks that everyone needs to know. Now, in the bullish market, so in the bullish market, we're looking for a price to go up. All right. You're looking for price to go up. And there's a conception or a thought on some people that price goes up in a straight line. It never goes up in a straight line. All right. It never goes up in a straight line. So when you are in a bullish market, you see the price increasing. So I mean, price is increasing. Okay. Price of that commodity is increasing. So you're saying to yourself, okay, so you see here, the price goes up and it makes something we call a higher high. A higher high. And then, because it doesn't go in a straight line, it pulls back and causes what we make something called a higher low. So you get a higher high and then a higher low. A higher high and then a higher low. A higher high and then a higher low. Once that continues, that is a bullish market. In other words, your price will continue to increase. All right. Once you see that happening, you go to a higher high, and then another higher high, and then another higher high. That's telling you that the market is increasing. The market is going up. So whatever you are in, FOREX, whatever currencies you're in, whatever commodity you're in, and you're seeing higher highs being produced each time, that's telling you the market is going up. You're becoming a bullish market, and vice versa. Now, when you go into your bearish market, again, just the opposite. So you're making, it comes down, it makes what we call a lower low, it moves back up, makes what we call a lower high, it comes back down, makes what we call a lower low, it goes up, makes a lower high, and then it continues down, and so on and so forth. So you see, this is how you recognize how the market is moving. Because remember, as traders, we love to trade with the trend. So the market is going up, we want to be going up with the market. The market is going down, we want to be going down with the market. That's how we make our money, by the movement of the market. Okay. So if you can recognize how the market is moving, and then it helps you to understand and to plan your trades appropriately. You want to know how the market is moving. And then you might say, sometimes I see this. I see this. The market is not making any direction. I can't decide if it's going up. I can't decide if it's going down. So you say to yourself, this is what I call sideways movement. All right, sideways movement. The market is not making any higher highs and it's not making any lower lows. And I call these things equal highs, where it goes up to a level here and it pushes back down. It doesn't break that level. You got equal highs, equal lows, equal highs, equal lows. That's when the market is not trending that much. Remember, as a trader, you need your market to be trending, because a trending market pays the bills. And you need your market to be trending. So now, let's go back quickly. Higher highs, higher lows in the outward direction for a bullish market. Lower highs, lower lows going down. Equal highs, equal lows for markets that are not trending, okay? And that's what you expect to happen. Let's get to our charts now. So now that we understand that we're on that same wavelength, now let's apply this to our charts, because application is the key. Application is the key. It doesn't make sense understanding all the theory and cannot apply it, okay? I did a degree with a lot of theory. I read a lot of books, but what makes a good physician is some person who can apply what is in the book and apply it to managing the patient. The same thing here today. You all know the principles, but it's how you apply the principles to the chart. So let's go to the charts now. You can see our charts. Let's go to DXY, my favorite chart to look at. Now, guys, DXY is basically the US dollar index. The US dollar index, all right? The US dollar index, all right? So let's make it a little bit bigger for everyone to see. It's the US dollar index. Now, as you heard before from Ms. Dyer, from Ms. Graham, you have the top-down analysis. I always start my analysis on the day chart, Now that you guys understand what's a trending market, is this market trending? Is the DXY trending? Put in the chat. Let's see how you understand that. Is the DXY trending at the moment? Let's put in the chat. Let's see what you understand from what I just went through there. Is the DXY trending? Is DXY trending? Is DXY? Put in the chat, guys. Put in the chat. Let's see. I love to get some persons coming back talking about to you. It's trending. All right. So you can see from our chart here that the DXY presently is on day chart. It's going down. Price is decreasing. Price is decreasing. Price is decreasing. So if you know that price is decreasing, you need to know exactly. Remember what we said before? In a decreasing market or decreasing structure, it makes a lower low, and then it pulls back and makes a lower high. All right, and that is something very, very important for every one of us here, because when you get in a trade at a lower low for a sell, and it pulls back to a lower high, you're going to tell yourself, wow, I did this trade wrong. I did my analysis incorrectly. I don't know what's happened to trading. Trading is not doing well for me. No. If you understand the structure and how the market moves, then you will say to yourself, next time I would try to get in the trade, not at a lower low, but I want to get in the trade around a lower high to go for the next lower low. All right. And that's always a problem of a lot of us when we first started with trading. Entry, get into trades at the correct time. So here we can see we have DXY, which is our US dollar index. I'm getting somewhere, guys. I'm getting somewhere of this. This is our US dollar index. All right. So here we are. This is where we are in the market at the present moment. All right. Up here, where my red arrow was or is that was on 9th of March. Now this is our day chart. It's on 9th of March. 9th of March was our last NFP, all right, non-farm payroll day. All right. So you see what happens after that? The market is tanked since then. It's come down, made a lower low here, pull back, made a lower high, and it's pulled down to another lower low. All right. Structure. It's following structure. Now we have reached a stage where now, if you look to the left, and I always love to look to the left, all right? Always look to the left. Always look to the left. Just default your head to the left all the time. Default your head to the left. So when you look to the left on this particular trade, you can see there's lots of noise in here. I call it noise, but other people will say there's lots of doji candles. You see all these spikes in the candles here. That shows indecision in the market. Lots of indecision. The market is indecisive. It doesn't know what to do between here and here. It's indecisive. The buyers come in, then the sellers come in. The sellers come in, then the buyers come in. No one can actually put their foot down and say, look, you're going to buy or you're going to sell. So what happens in here? You get a lot of rejection in here. Lots of stuff goes on in here. Lots and lots of stuff. Lots of indecisiveness goes on in here. Now, what I'm trying to say is that if you look in the left, previously, if there was indecisiveness in here previously, you're expecting some kind of indecisiveness here again. Expecting, not say it will happen, but say the expectation is that if it's happened over here, there's a high probability it will happen over here. All right. So you had a rejection around this area previously, and we're back to that area again. We're back here again. We're back here again. Now, DXY is your US dollar index. So news yesterday, your interest rate went up by 1/4 point, and the market continued to fall. The market's going down. So in other words, your US dollar is losing its value a little bit. It's losing its value, losing its value. It's going down. All right. Now, if you understand that your US dollar now, which is DXY, is actually losing its value, then that helps you to see going forward when you go to trade periods where the US dollar is involved. It helps you because if you know the US is getting weaker, then it helps you to plan your trades going forward on other peers that involve the US dollar, other major peers. All right. But what you can also see here is that this area here, looking left, is an area of concern. Is an area of concern on a DXY because at this particular level here, you are expecting some kind of rejection. That's the expectation because here was a lot of noise here before, lots of indecisiveness. So probably at this level here is a possibility that you will get that indecisiveness again. And so there's a possibility you might see that this particular trade on the day chart might reject off of that zone. There's a possibility. There's a possibility it might reject off this zone. All right. And there's also a possibility that it might push all the way through down to the zone at the bottom down here. Okay. But that's what you know. And in the back of your head, you're saying to yourself, there are two possibilities here. One, it might reject off that zone because previously there was lots of indecisiveness in that zone before, or there might be something that happens in the market that pushes it right through back down to these levels down here. Okay. Now, from yesterday's news, interest rate went up. You can see the markets reacted negatively. In other words, the market has pushed down. The markets continue to push down. And these are Hikinachi candles, guys. And you can see that these candles are strong, trending downward candles. You can see, look at the body of the candles. Massive bodies, flat top. Massive bodies, flat top. Massive bodies, flat top. Massive bodies, flat top. That's telling you that the trend is very strong to the downside. The trend is very, very, very strong to the downside. Okay? Very, very strong. So your candle bodies are massive. You got some small bits. The trend is very strong to the downside. So, knowing this now, knowing this that your trend is very, very, very strong to the downside, and thinking in mind that also that this level here might be a massive rejection point, there's a possibility in the back of your head you must think that this trend might continue, but what we did before, you have your lower high. So if you assume that this level is a lower low, a lower low down here, you're expecting that possibly, that this trade has to pull back, reject off this zone, pull back, and then to drop again. Because it has to make a lower high, then to drop to a lower low. All right? So there might be some kind of retracement off of this zone to a lower high, then to a lower low. Because the trend to the downside is very strong at the present moment. It's very, very, very strong. Now, guys, if you understand that, what I'm trying to say, put your 777s in the chat. Put your 777s in the chat. If I'm lost you along the way, put your 555. But just understand, we're trying to understand the structure of the market. Just put your 777s in. If I'm keeping you there or if I'm losing you, your 555. Because I don't want to lose anyone along the way. Right, so we got a strong trend to the downside. Strong trend to the downside. So we're saying that possibly it will continue to the downside. But we know that trades do not continue in a straight line. It doesn't just continue down, boom, 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 boom. No. We know possibly you have to get some kind of retracement, which will make a lower high before it drops for the lower low. All right, so that's what we're working on. So let's go. Now we understand that. Now we understand what DXY is doing. It's moving to the downside and it has a very strong move to the downside. Now you understanding that, you can now say, okay, let's go look at the US peers. You can say, let's look at US peers, see what they're doing. So the first one we go to is probably, let's look at one, Euro USD. Let's see what Euro USD is doing. Euro USD. Euro USD. Now, guys, this is on the day chart also. You can look at the forward chart if you want to, but let's deal with the day chart. We're on the day charts for now. The Euro USD. And note, guys, that I tend not to trade with those indicators. I tend not to do that, but that is not a problem. You can still trade your indicators. I love to see the naked chart. It helps me better to understand the trading better. I love naked charts. I love naked charts. All right. But let's go back to, let me show you something. Let's go back to DXY. For those who love the indicators, DXY, you put your stochastic on. You can see that also your stochastic is actually oversold at the present moment. For those who love their stochastic, it's oversold. It's oversold. So the possibility of after being oversold is that it goes back up, which would probably tell us that there's possible some kind of rejection off this zone. All right. So I don't think that I've ditched the stochastic. No, I have not. But I love to trade the naked charts. To me, it helps me. I see the picture bigger on naked charts and not being judgmental or dependent on the indicators. All right. So I'm not taking away indicators from you. All I'm saying is that I'm trying to show you from the naked chart how it all filters in and it all makes sense once you understand the structure of the market. Okay. So now let's go to, what was it again? Let's go to AUD USD. Oh, sorry, Euro USD. Euro USD. So Euro USD, here we are. And you recognize that for those who know about your psychological levels, we all have them, you have them join up in here so you can see exactly where they are. So Euro USD. So let's look at Euro USD, see where we are in the market on a day chart. So previously rejected off this zone down here. So you see this zone is a significant area of rejection. So it came down, rejected here, pushed back up, came back down, rejected here again, up, rejected here again, rejected. So we know that this area was a significant area for rejection. All right. So rejected off this area 4 times, it's pulled up now. So thinking about it now, let's see how you guys understand this trading. So we have our DXY, which is our US index going down. We're trading Euro USD. How do you think the Euro USD should react? How do you think the Euro USD should react? Should it buy or should it sell? Put it in the chat, guys. Should it buy or should it sell? Do you expect price to increase or would you expect price to decrease, knowing what you know about the DXY at the present moment? Let's drop it in the chat. Because you know what DXY is doing. So let me see if you know understand what's going on. Because the US is weak, no? So your US has a strong move to the downside. So your Euro USD, everything being equal, should be moving to the upside. All right. But remember what we looked at on the DXY earlier. DXY is not coming to a significant zone in the market, a significant area in the market, which we're not sure if it's going to continue to the downside or it's going to go back and make a lower high. We're not sure. So we must keep that in the back of our heads. So looking at our chart in front of you now, your Euro USD, we can now look at the Euro USD and say, okay, we've retraced off or rejected off this zone or reacted off this zone so many times before. We've gone to the upside, but how high can we go? The question you got to ask yourself, how high can we go? So that's what you got to look at the market and see, how high can you go? There are lots of possibilities here. You can go as high as you want to. Somebody can say you can go as high as you want to. You can go as high as you want to. But let's look at the structure here, guys. Let's see where we can go. Now, let's see where the trade has been to before. Now, if you want to draw a zone, let's draw a zone in here. And that there, because we rejected off there a couple of times. Let's see. Let's go with the more conservative move at this present moment. If you look here, we had a rejection here. We had a rejection here. We had a rejection here. We had a rejection there. We had a rejection here. All in here. And all in all, we've not had a candle above this zone for the last couple of weeks. All right. If you want to go to a little bigger up, let's go to a week chart and see what's doing. There you go. So for a long, long time, price has not gone past this zone here, except for that wick. All right. Price has not gone past this area for a long, long, long time. Price has not gone above this area. It's not gone above there. Not gone above there at all. So looking at this kind of trade now, we're saying to ourselves, look, we are back in this zone again. We're back in this area again where price has found it very difficult to break through. We're back here again. We're back to that level again. All right. We know that DXY has come to a level where it has lots and lots of possibilities of rejecting. Your DXY has come to an area where the possibility of rejection are really, really, really high. Your EURUSD is an area where it's not broken through for many, 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 many weeks. All right. So you're saying to yourself, is there a correlation here? Do I want to stay in the Euro USD at the present moment or buy? Or am I looking at Euro USD for possible retracement? All right. And I would say, I would say, you could say the correct answer would be to wait and see. But there's a high possibility now for those who trade on the longer term that for Euro USD to react off of this zone here or this area here down back to the downside. There's a high possibility for Euro USD to reject off this area back to the downside. But that would indicate that your US dollar has to get stronger. But to go back down here, your US dollar will have to get stronger. Okay? And let's recap your DXY. So for your DXY now, coming to that area here, so you're expecting your DXY, if you continue in a downtrend, it has to make a lower high. And if it makes a lower high, that would imply that your dollar index is increasing. So if the US increase back to a lower high, then to drop to a lower low, then there's a high possibility then that your Euro USD can reject off of this zone and come out down. Come out down. So this is a trade to look at, your Euro USD for sell going forward. Your Euro USD for sell. This is a trade that we can all look at. All right. It all depends on our DXY, but this is a trade we can look at because if our DXY actually follows the structure and it goes back to make a lower high, then we're going to expect a rejection off this zone to the downside on the Euro USD. And then you guys can determine where you put your stop loss, your take profits, and so on and so forth. I usually do it by support and resistance. So you look for your support and resistance levels, and those be your suggested take profits on the way down. All right. So that is a trade that you can look at going forward. Euro USD for sell. All right. Look at that trade. You know, and not the trade you're going to take, but look at it. Look at the trade. See how it rejects. See how it rejects off this zone. See how it follows the DXY. Now, if the DXY continues down, your DXY does not reject, then you're going to look for the Euro USD to continue to the upside. All right. And that's how you're going to trade this one. Your DXY continues down. Today, news comes out today again. It continues to the downside. And then US dollar continues to remain weak. Then you're looking for your Euro USD to possibly break through this area here and keeps going to the upside. All right. Any questions? Drop in the chat. Any questions, comments, or testimonies, guys? Drop it in the chat. All right. Let's move on to another pair. Let's move on to AUD USD. AUD USD. AUD USD. And you're going to find that they're all possibly doing the same thing. AUD USD. So what's happening here, guys? So we look at AUD USD on the day chart. AUD USD. So first of all, the first thing that comes out to you about AUD USD, that AUD USD has been flying to the downside. So you're making lower lows all the way down. So you can see it's going down to the downside, downside, downside. Now, what has it done after that? It's gone down here. So this will be your lower low down here. Yeah, it's going to a lower low here. And then what happens after a lower low? We expect to see a lower high. It's probably around here. But it's also come back to this zone here, which we're expecting for, which suggests to me that if you think it's going to continue in the downtrend and it's pulled back now to a lower high, the possibility is it's preparing for what happens after a lower high, guys? Put in chat. What do you expect after the lower high? It's looking for a lower low. So you see that you've gone down. You come down here, your lower low, lower high. You can call this one all down here, lower, lower, lower high, lower low, back to lower high here. After that, you're looking for a possibility that this trade might go that direction. All right. And again, if that happens, that has to happen. The only way that's going to happen, guys, the only way that is going to happen is if your US actually develops strength and the DXY. All right, strength. So you can see now, like your Euro USD, your AUD USD are two nice trades that's setting up for you going forward. All right, see what the DXY is doing. See what the DXY is doing. But if your DXY actually rejects off of that zone back to the upside, then you know that these trades are going to become really good trades, really profitable trades to the downside. All right. So you can see they're setting up. It's a structure they're setting up for move to the downside. All right. So AUD, Euro USD. Look at those two trades to the downside, guys. Look at those two trades to the downside. And also remember, your NFP is going to come in another week or two. Massive US news coming out in another week or two. So keep an eye on these two trades. Keep an eye on these two trades because they can help you, and you can start to see some movements on the AUD USD and the Euro USD going forward. All right, and you can apply to all the USD pairs, guys. Look at all the USD pairs. See them all setting up. They're all doing exactly the same thing or nearly the same thing. They're all doing similar stuff. They all come back to that area looking for rejection. They're all setting up around that area at the present moment. All right. So you wait until you start to see the rejection and then the retracement, and then you jump in. You can jump in for the sell. But you have to wait. You have to wait. All right. Because what the DXY does determines what a lot of these trades will do. So you're waiting. If DXY continues, it breaks through that zone and keeps going down, these trades will continue to the upside. They will all continue to the upside. So keep an eye on DXY. And guys, that helps you. Understanding the news, understanding your fundamentals helps you with your technical. They both work hand in hand. They both work hand in hand. So you know that if you have your technical analysis set up, the fundamentals come, they work hand in hand. They help you to determine where to go, how to go, and when to go. All right. So that is something that you can look at. Look at those two trades going forward, your USD, your Euro USD, and your AUD USD. Have a look at those two trades. And also keep an eye on your DXY. Keep an eye on your DXY. All right. Let's have a look at another trade. Now, this one's not a US pair. This one's AUD. This one is AUD NZD. All right, guys, I'm sticking on the day chart today. I'm sticking on the day chart for right now today. Sticking on the day chart today. So look at this one now. AUD NZD. AUD NZD. And this one, on our Hikanachi candles. And remember, we looked at the structure to the downside. Structure to the downside. Look at this one here. This classic one. Boom. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. All right. And this is a classic way to understand how to know when your structure is broken. Because after your lower low, you want to make a lower high and then a lower low. Now your lower high must be less or below this previous lower high. No, it's going to be a higher high. So you know that once it starts to break this level here to the upside, that your structure is automatically broken. You got this downtrend all the way down, made your lower low. You want to make a lower high. Your lower high must be less than the previous lower high. So you make a lower high here and continue downside, yes. But when your lower high is broken, so the trade goes above your previous lower high, it tells you that possibly that trade is either stopped, paused, or it's completely broken. And here we see it went to our lower high and made a new higher high, higher low, higher high, or higher high up here, and all the way up. So understanding structure also tells you when there's a possibility a trade or a trend is broken. All right. It helps you understanding structure. So if you're here now and you call this a lower low, and you get in for a sell, we're not getting for sells on lower lows, guys. We're not getting sells on lower lows because it's going to pull back, but you don't know if it's going to pull back past the previous lower low. If it pulls back past the previous lower low, automatically you're not going to get your pips down here. Or it's going to take a long time before you get your pips because your trend is now, your structure is now broken. So instead of having a down structure, you're looking for an upward direction. Instead of price continue to decrease, price starts to increase. And you're going to sit there and see your trades going into more and more and more red. But this also helps you to understand that if you aim for a sell and you go in here and your trade goes above there, there's a possibility that your trade is broken. And it helps you to decide, am I going to stay in this trade? Am I going to come out this trade? Am I going to make a decision to say, is this trade coming back to me? All right. But what it does, it doesn't mean you have to stop the trade, but what it tells you is that you have to reassess your trade. Have a look at the trade again. And guys, I'm looking at the day chart today only. I'm looking at the day chart only. But the structure on every time frame. All right. 15-minute chart, the 1 hour chart, the 4 hour chart, the 5-minute chart. The structure on every time frame. So you can apply this to any time frame you want to trade on. All right. So, but for the intermediate class, we'll be looking at the bigger time frame, the 4 hour and the day. But for any time frame you're trading on, you can apply structure to any time frame. So the 5-minute, there's structure. The 15-minute, there's structure. The 1 hour, there's structure. The 4 hour, there's structure. But if you understand structure on the bigger time frames, when you go down to the smaller time frames, you start to see structure within structure. So that helps you now to understand, you know what the overall big picture is, but the smaller picture, you can still catch your pips in the smaller picture. There's structure within structure. All right. But we're looking at what trades potentially will do going forward. And AUD, NZD is pushed back up now. Here we are. This is where we are in the market now. This is where we are in the market. Here we are in the market. So quite classic. AUD, NZD is pushed the way down. It made a lower low here, lower high, lower low, possible lower high here again. And it's pushing back down to probably make a lower low. But, again, here we go. So you can see it's pushed down to a lower low around here, push back up to lower high, possibly pushing back down to make a lower low. All right. But you can see here that at this zone here, that the trades rejected off of here 1, 2, 3, 4, 5 times previously. It's rejected off his zone 5 times previously. All right. So you're looking at this trade. So possibly it's still going down, but we're looking for it to make a lower low for that trend to continue. All right. For that trend to continue, you want to make a lower low going down, but it has to break through this zone, which has proven futile in the past. Because look at here, it's not broken through here. It's been futile in the past. So you've got to say to yourself, now, am I, Kurt, going to say that I'm going to go for a take profit way below here if the trade has been futile breaking through this zone previously? All right. We know it's falling in structure. We know it's going down. We know it's going back down. It begins to move down. But is it going to break this zone is the question you got to ask yourself. Do I want to take profits below this zone? That's what you got to ask yourself. Do I want to take that? Do I don't want to take that? Do I want to take that? Or am I believing that the most logical thing probably will be it rejects off that zone back up to here, comes back, rejects off the zone, go back here. And guys, that's what you have to be able to analyze these trades and take them into consideration. That's what you have to take into consideration. Remember, even though you know it's a downtrend, it's a downtrend. So you're making your lower lows, lower highs, lower lows, lower highs. You expect to come down here. You're going to also expect that around this area here might be some kind of rejection. There might be a lot of the trade might just fool around this area for a little bit because look at all these spikes in here. The sellers and buyers, they're all fooling around here. The sellers came in, buyers came in. Sellers came in, buyers came in. There was no decision made in here. All right, no decisions being made. So you're now saying to yourself, I'm looking for this trade possibly to go down, but there's also a possibility straight can reject off of this zone. Reject off of that zone. So this is a trade that you can look at, see how it rejects, see if it rejects off the zone or it keeps going down. If it continues in structure, you're expecting it to continue down to here. All right. If it continues structure, it has to break this zone to go down, 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 to go down. But if this zone becomes an area where it finds it difficult to break through again, and AUD, AZD is one of those pairs that they're very close to one another in proximity, where they are in the world. They follow one another, they affect one another. So let's see what happens. Let's see what happens here. This is a trade to keep an eye on, guys. Trade to keep an eye on. Trade to keep an eye on. And see how it actually plays out going forward. So AUD, NZD, those are the three trades we're going to look at today. AUD, NZD, AUD, USD, and Euro, USD. Those are the pairs that you need to keep an eye on going forward, guys. I'll review them again when they come back next week. I will review those again next week. Have a look at them again next week. But what I want everyone to do when you come onto these classes on Thursday morning, I want you to come with your computers. I want to come with your laptops. I want to come with your iPads, what the case may be. And I want you to be actually drawing on the chart and being active. Actually get into your charts and drawing up your charts. It don't have to look like mine, but draw up your charts while we are going through the trades. All right? It will help you. And it also helps you to look forward to longer trending trades. All right? It helps you to keep staying trades longer, because if you understand the structure, then you know you can stay in the trade a little bit longer. Notice sometimes when you get in a trade, you take your profit, and then you raise the trade moves another 100 pips, and you say to yourself, why did I not stay in that trade longer? Because you never understood the structure of the market. If you understand the structure of the market, it helps you to stay in trades longer. All right, you know the trade's going to pull back at one point, but after that, it continues in that direction you're going in. So I want everyone, and you hear my voice, when you come on to this call next Thursday morning, to come with your devices. Come with your devices all prepped and ready. On your trading view, get there. We're going to look at, guys, we're going to look at AUD, NZD, we're going to look at Euro, AUD, USD, and Euro, USD. Those three, we're going to look at those next week. See how they played out. See what happens. All right. And every day, if you guys are trading US pairs, if you're trading US pairs every day, have a look at DXY. Have a look at the 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 DXY. Have a look. Because DXY helps you to envision what can possibly happen in the future. It doesn't say it will happen, but it helps you to envision. It gives you a vision. It gives you a binocular view of what's coming. Because it gives you the movement of how the US index is moving. All right? It gives you a binocular vision. It gives you a big vision. You see how it sees a bigger picture? Better. So if you're trading US pairs going forward, guys, and I want you guys to be trading now, not catching 10 pips or 15 pips. I want you catching 30, 40, 50, 60, 70, 80, 90, 100 plus pips. That's the aim. To stay in the trade a little bit longer, collect more pips, be more profitable, but also understand what you're doing and why you're doing it. And the only way you can do that, not by coming to listen to me on a weekly basis, but by also getting on your charts, drawing up your charts, seeing how the charts play out, and then from your experience of yesterday will help you with your trade of tomorrow. That's how it works out. That's how it works. All right, guys? So for homework for this week, for everyone here, and your friends or whoever else that were not able to make it, to have a look at the US, AUD, USD, for the sell, rejection of that zone. Your Euro, USD, possible down to downside, rejection of that zone. Your AUD, NZD, have a look at that, and to follow the DXY going forward. All right, guys, that is it for today. Thank you for listening. I want to see you guys again on Monday next week for the basics class with Miss Graham at 5:30 Eastern Standard Time. And again, for the setups for the week with Miss Tasha Ender at 9:30 a.m. Eastern Standard Time, guys. But remember, your homework, your AUD, USD, your Euro USD, your AUD AZD, and to make sure you look at your DXY. Thank you, guys. Enjoy the rest of your day. I hope that it was a beneficial session to you guys, and may God bless every one of you. Thank you very much. God bless.